Hello everyone, my name is Marilena and I will be your hostess for today. Together with me I have Peter, our senior market analyst at IronFX. Hello Peter.
Hello.
Thank you for joining us today as we're looking at the fundamentals and driving the markets currently. So Peter, what's new in the markets?
Well, we had yesterday, it's as if the market sentiment is about to reverse. And it was characteristic that there are wide discussions about the Fed's intentions and the possibility that the Fed may slow down its rate hiking path from the December meeting onwards. Definitely the November meeting, the Fed's expected to deliver a 75 basis points rate hike. But in the December meeting, we may see it lowering the rate hikes, say, for example, to 50 basis points. Actually, the market seems to be split on the idea, whether it's going to be a 50 basis points rate hike or 75 basis points rate hike. Overall, though, the doubt, or if you prefer, the idea, the notion that the Fed may start easing its rate hiking path tended to cause a hesitation for greenback bulls on the one hand, and it was characteristic that the US dollar index yesterday was practically on hold. It was at the same levels as the day began. It's going to be interesting to see whether that turns into a more risk-oriented market sentiment, which could cause some safe haven outflows for the US dollar.
And how did US stock markets react?
Well, we had mixed signals there as well. We had practically all three main indexes remaining at near the same levels. The day began, we had Dow Jones, which was in the greens. We had S&P 500 was also in the greens. Nasdaq dropped a little bit. I would dare to note that the earnings season is in full swing. Today we're getting a number of high-profile companies which will be releasing their earnings reports for Q3. Among them, I would be highlighting definitely Alphabet for Google, Twitter, Coca-Cola is another one, 3M, General Motors. All these companies could make headlines and could, to one degree or the other, practically define the market sentiment. Now, should the earnings, both on the revenue level as well as on an EPS level, be better than expected, we may see the market sentiment improving further, which could provide further support in general for US stock markets.
Back in the FX market, I understand that Rishi Sunak is to become the new UK Prime Minister?
Yes, Rishi Sunak is practically to become the new Prime Minister of the UK. Actually, I think there's going to be a meeting with the King of England today, at which he will become the new Prime Minister. Practically, Rishi Sunak, after Boris Johnson practically dropped out of the race and Penny Mordaunt dropped out of the race as well, Rishi Sunak was the sole contestant. So practically there was no need for a vote. And it's a big question whether Sunak is going to be able to manage, because the UK is not in shambles, the UK economy, but still it's not exactly rosy. It's a very difficult period. We have a difficult winter ahead. So it's going to take lots of skill for the new UK Prime Minister to actually manage the situation and deliver.
And what else will you note on a fundamental level?
Well, the euro stood out yesterday. We saw euro rising, and it rose against the US dollar, the pound, the yen, and CHF. So it was a sign of a broader strength of the common currency. And that occurred despite the preliminary PMI figures for October being worse than expected. We actually, during the European session, we actually expected the euro at some point to start losing ground. It didn't, it gained. And I would also note that today we had Germany's IFO indicators, which dropped, and definitely that's not a positive, but at least they didn't drop as much as they were expected. So the problem for the largest economy in the Eurozone may not be as bad as we initially thought. Also, I would be expecting Euro traders to start turning their attention towards ECB's interest rate decision. That's on Thursday. The bank is expected to deliver a 75 basis points rate hike and could maintain a hawkish tone in its accompanying statement, which could be providing some support for the euro, and definitely euro traders are preparing from now. On the other hand, there is a possible escalation in the war in Ukraine, which could weigh on the common currency somewhat. And I would also be noting on a fundamental level, China. Now, we had a sell-off of Chinese assets yesterday. And it was very interesting in the sense that it may be the case that the Congress of the Chinese Communist Party not only did it not excite the markets, on the contrary, it tended to weigh on Chinese markets. For the time being, we would like to see how this whole situation plays out, especially about the Chinese private sector.
Mm-hmm.
That's it.
And what's on the calendar for today?
Well, we had already mentioned German IFO indicators. Today we get from the UK the CBI industrial orders, the transferred industrial orders, and we also note the UK business optimism. That's for Q4. Should the readings drop further, we may see them practically weighing on the pound.
Mm-hmm.
On the other hand, in the American session, I would be definitely highlighting the US consumer confidence is expected to drop a bit. And if actually so, we may see it weighing on the US dollar. Also from the US, we get the Richmond index, which shows the general activity, economic activity in the Richmond area. Should that drop, we may see the US dollar weakening once again. And I would be noting on a monetary level that we have Fed Board Governor Waller, which will be making statements today. Actually, it's a little bit odd because there is a moratorium period right now where Fed policymakers are not allowed to make any statements ahead of the Fed's interest rate decision next week. But nevertheless, I think he will be closely watched.
Mm-hmm.
Now, during tomorrow's Asian session, we definitely highlight Australia's CPI rates. Therefore, Q3, they are expected to accelerate the headline CPI rate on a year-on-year level. And that could provide some support for the Aussie, as that may set into doubt the easing of RBA's rate hiking path. It was characteristic that in the last meeting, the bank hiked rates by only 25 basis points. And an acceleration of the headline CPI rate may imply that more tightening is needed and at a faster pace.
Mm-hmm. Any final comments?
Well, it's going to be interesting to see whether the positive market sentiment, which seemed to be starting yesterday, is going to be continued today.
Mm-hmm.
And should that be the case, we may see riskier assets such as stocks or commodity currencies getting some support, while the US dollar may experience some safe haven outflows.
Mm-hmm. Great. Thank you, Peter, for your time. And everyone for watching. Join us after a short break for technical analysis with Peter Yosef.
Welcome to the technical analysis part of today's presentation. In front of your screens, you have the US dollar index. It's the 4-hour time frame. And all charts to be presented are to be of the same time frame unless otherwise stated. Now, with no time to waste, we see that the stabilization of the US dollar has been maintained. It was interesting that practically you saw the USD remaining near the 111.75 after its wide drop. And that was practically, let's have a look, Friday. Yep, on Friday the 21st. And on a fundamental level, we have noted that the idea of the Fed starting to slow down its rate hiking path from the December meeting onwards tended to weaken the USD. Yet for the time being seems to be finding some support. The US dollar index is finding some support at 111.75. And we tend to maintain a bias for sideways movement to continue. Now for a bearish scenario, which by the way may also be supported by the notion that the Bollinger Bands along with the 20 moving average have started to have a downward slope, 1, 2, 3, while the RSI indicator remains below the reading of 50, not far away, but still below it. Now, for a bearish outlook, we would require a clear breaking of the 111.75 and the price action to start aiming, if not even breaching, the 110.80, which provided support practically on the 6th of October. But I would dare to note that that's only the start of it. Should the US dollar index drop, we may see a wide drop. On the other hand, should the pair continue stabilization, maybe correct a little bit higher, etc., I wouldn't expect to surpass the 113.45, which provided resistance here and here. While a bullish outlook would require clear breaking of the R1 and the price action to start aiming the R2, 114.70, which provided resistance practically reversed the upward motion of the index on the 28th of September. Let's have a look at Euro USD. Now, Euro USD, which for the time being seems to be in an upward motion. With this exception here, the price action practically had a stabilization and continues higher. It was interesting that this level was broken. But at this point, I would like to have a look at the wider picture. Let's clear these former trend lines to get a clearer view. It's important in technical analysis that we get a clear view. Sometimes less is more in the case of technical analysis. You get a far more clearer picture. And should we drill out to the daily chart? Let's do that. You can see that there is a downward trend line, a steep downward trend line actually guiding the palette and correct it a little bit lower, somewhere like this. And it's been guiding it since the 10th of February. So for the time being, we tend to maintain the idea of a bearish movement in the long run. But for day traders, note that we have one throw, higher throw, higher throw. This was a low one, okay, but then again, higher throw. And we have continuous higher peaks, 1, 2, 3, 4. So there seem to be some bullish tendencies. On the other hand, there was some stabilization at some point between the 0.9875 and the 0.9755. Also note that the RSI indicator is currently above the reading of 50. Actually, it's at 57.5, 57.4. So there are some slight bullish tendencies present for the pair in the 4-hour chart, which should not be neglected. Now, for the time being, given the correction lower below the 0.9875, we tend to maintain a bias for sideways movement between the R1 and the S1. Definitely the breaking of the R1 is not a sign of a continuance of the sideways motion, but the fact that it later corrected lower below the R1 tends to imply that we would require a clear breaking of the first resistance line in order to switch our bias for sideways movement in favor of a bullish outlook. Now, should that be the case, we may see the price action dropping a little bit further lower and stabilizing between the R1 and the S1. On the other hand, should the bulls take over, I would expect a clear breaking of the R1, 0.9875. I would also expect a clear breaking of the pre-mentioned downward trend line and the price action to actively aim for the parallel level R2. Now, for a bearish scenario, however improbable that may be, it's still possible and should be covered. We may see the price action dropping. We would require a breaking of the 0.9755 and the price action to start aiming for 0.9665. Okay, let's have a look at cable. Also in a sideways movement. Let me make the slight readjustments here. Between the 1.14 and the 1.1145, we maintain our bias for a sideways movement between the pre-mentioned levels. On the other hand, though, note how the Bollinger Bands along with the 20 moving average have started slowly rising. Also note that the RSI indicator bounced on the reading of 50 and rose slightly higher, which more or less tends to imply that there may be some bullish tendencies here for the pair. Yet, for a bullish scenario, once again, we would require clear breaking of the upper boundary of its current sideways movement. Excuse me. Practically the R1 1.14 resistance line, and the price action to start aiming, if not even testing, the 1.1590. On the other hand, for a bearish scenario, we may see the price action dropping. Definitely would require clear breaking of the 1.1145 and the price action to start aiming for the 1.0925. Once again, main base scenario for now is for cable to continue its stabilization, its sideways movement between the 1.14 resistance line and the 1.1145 support level. Let's move to safe haven currency pair USD/JPY. As we had expected, yesterday's analysis, USD/JPY remained in a tight sideways motion between the 150 and 147.70. We tend to expect the sideways motion to be continued, in which case we may see the price action remaining between the pre-mentioned levels. On the other hand, I would note that the RSI indicator is just below the reading of 50, which on the one hand definitely implies that there's still some uncertainty among the market about the direction of the pair's next leg. Should the bulls take over, we may see the price action rising, testing if not breaking the 150 resistance line and start aiming for higher ground. While on the flip side, should the bears take over, we may see the price action dropping, testing the 147.70, maybe even breaking it and start aiming for the 145.50 level, which practically was the lower boundary of the pair on the correction market, on the market operation of Japan on Friday. Actually, this level was tested on Monday, the 24th. Nevertheless, that's still valid. Let's have a look at the second commodity currency, safe haven currency pair, that would be USD-CHF. Okay, there seems to be a stabilization of the pair. Most probably we will be maintaining a bias for sideways motion between the 1.0050 and the 0.9920. We are basing this judgment practically on two factors. On the one hand, we have a stabilization of the RSI indicator, which seems to be revolving around the reading of 50, also implying some indecision on behalf of the market and the sideways movement. I would also not be surprised to see that the Bollinger Bands and the 20 moving average remain in a sideways motion as well. On the other hand, you have the 100 moving average and the 200 moving average in orange, which still maintain an upward motion, reflecting practically the rise of the pair since here, however in delayed fashion, and we're not able to fully price in the stabilization of the pair over the past 1.5 weeks. Should the bulls maintain control once again, given also that we had this spectacular rise here that was on Friday, if I'm correct, you can have a look. Yep, the 21st and the correction lower later on. Should the bulls take over, we may see them breaking the 1.0050 and start aiming for 1.0145. On the other hand, should the selling interest be expressed by the market for USD-CHF and be it an extensive one, now to turn our bias for a sideways movement in favor of a bearish outlook, we would require a clear breaking of the 0.9920 support line and start aiming for 0.9785. At this point, I would like to have a look not only the US dollar against the CHF, but also the euro against the CHF and the pound. And let's start with euro against CHF. You can see that there is a nice steady upward trend line guiding the pair. Very, very indicative. Let's also place some resistance and support lines. Daily chart. Wow, that gets even better, because you can see that there was an even more intense upward movement. Very, very interesting. Now let's find the resistance support lines. Drilling back to the 4-hour chart. One support line, 0.9740. That would be one level, however I would prefer this one. This double touch here. And that would be the 0.98. O2. And final support line to be placed at this resistance line. A little bit lower. I need more touches here. This one, this peak here. It also provided the support here, which becomes more evident if we drill into the 1 hour chart. Let me show you. Here it is. And here we have the support. Okay, back to the 4 hour chart. And that would be the 0.9850. On the resistance side now we place one definitely on the peak here, which was able to reverse the upward motion of the pair during today's European session. And that would be the 0.99. And let's have a look also for support, for more resistance line. Let's go hunting. This would be another peak to mark. Actually, it's double one at 0.9950. One peak, second, pretty solid. And the third one would be a little bit far off. We'll be placing it here. It's interesting to see how this movement here verifies at the same time the second resistance line as a support line and the final resistance line as a resistance level. And that would be the 10045. Yep. Back to the 4 chart, readjusting it. Let's set the labels. And this would be, let's not forget it, this would be EUR CHF. Let's find the black color. Zero point 0.9740. I think it's not exactly visible. Yep. 24. Final support line being placed now at 0.9740. Second support line being placed at 0.9802. First support line being placed at 0.9850. 0.99 being the first resistance line. Second resistance line now being placed at 0.9950. Let's magnify this. And final resistance line being placed at 1.0045. Oh, that's also the parallel level, however, I would be skipping that right now. And I know also that's pretty wide, but the price action has proven that it could cover the distance easily. So for the time being, we tend to maintain a bullish bias for the for the pair, for Euro CHF. Note the intensification of the upward movement. Note also the RSI indicator, which is flirting with the reading of 70, more or less implying a rather bullish sentiment for the market, in which case we may see the price action rising, breaking the 0.99, and I wouldn't be surprised to see it even breaking above the 0.9950. For a bearish outlook, we would require a reversal, a breaking of the 0.9850, definitely a breaking of the pre-mentioned upward trend lines, both of them, which would be signaling a change of trend and the price action to start aiming for 0.9802. Let's have a look at GBP CHF. GBP CHF, in contrast to the euro, seems to remain rather stable, with a support line being placed somewhere here. And that would be the 1.1205 green. And I would be placing the resistance line at the current levels. $1.1365. The level was tested here, here, and seems about to be broken. Yet this channel here practically defines the sideways movement of the pair. The bullish tendencies though are present, given also the RSI indicator, which is above to rise, is above the reading of 50 and is still rising, aiming for a reading of 70. So we're going to be needing more resistance lines here. One more to be placed would be here. And that would be the 1.1525. And one more to be placed here. This peak here. And that would be the 1.1720. Let's find also some support lines. I would be noting this resistance line, but that's too close to the price action and to the first support line. So we're going to go a little bit lower. Next peak throw would be here. Seems to be valid, was tested twice. And that would be the 1.0992. Green, please. While even lower, I would be noting this level here. beautifully tested, aimed for info to the from the downside as well, and that would be the 1.0805. My bad, sorry. That's it. Let's place the resistance, the labels, and that would be the 1.1720. And speaking of labels, allow me please to add the label to make more visible the pair. That would be GBP CHF 48, black though. Second resistance line being placed at 1.1525. First support line, first resistance line, which is currently being tested actually, but holds its ground, would be the 1.1365. Let's readjust the chart. First support line being now placed at 1.1205. Second support line being placed at 1.0. Give me a sec. 10990. Let's have a second look at it just to be sure. 1.0992. Yep. Final support line now being placed at 1.0805. And here we go. Now, on the one hand, there are some bullish tendencies present for GBP CHF, and that becomes evident practically. Let me add also some Bollinger Bands here. That would be also interesting. Yeah, 20 moving average, 2 deviations, dark blue, yes. Now we have two elements which are supporting the idea that there is a bullish outlook here for GBP CHF. The first would be the fact that the 100 moving average, the green line here, has surpassed the 200 moving average, the orange line. At the same time, the second element is the RSI indicator, which has risen. It's actually pretty close to the reading of 70. It's actually at 64 right now. And it's also supporting the notion of a sideways motion, but of a bullish motion. On the other hand, though, we tend to maintain our bias for a sideways movement between the R1, 1.1365, and the 1.1205, given also that we had narrowing of the Bollinger Bands, and definitely we would expect it to be maintained as long as the price action respects the 1.1365 resistance line, which, mind you, by the way, right now the bullish movement of the pair seems to be testing it. Now, should the bulls be successful at clearly breaking the R1 and start aiming for the 1.1525, that would cause us to switch our bias for a sideways movement for GBP CHF in favor of a bullish outlook. On the other hand, should the bears take over, I would expect nothing less than the pair to drop, break the 1.1205 support line, and start aiming for the 1.0992. Let's have a look also at US stock markets. It was a promise from yesterday. Now we saw that this is US 30 cash, Dow Jones. This is the daily chart. Let's drill out to the 4-hour chart. That's better. And we see that the price action has risen, breaking the 31,180. Definite bullish movement here. It was characteristic that the RSI indicator actually broke slightly above the reading of 70 before correcting a little bit lower. So we have to turn the R1, former R1, into a support line. And let's go hunting for a new resistance line. This one, this peak here. And the next one should be somewhere up here. And this would be the, in red, 33,470. Lock this in. Let's make the necessary corrections, readjusting the chart. Correct the labels. Final support line being placed at 29,670 right now. Second support line being placed at 30,450. So practically we're moving up level by level. And we have now the first support line, which used to be a resistance line, now turned to support given that the price action has drilled above it. At the 31,180. First resistance line being placed at 32,000. Second resistance line being placed at 32,680. And final resistance line being placed at 33,470. So we tend to maintain a bullish bias for Dow Jones's movement. And should that be the case, I wouldn't be surprised to see the price action rising, breaking the 32,000 resistance line and aim higher. On the other hand, note the intense red candlestick in today's European session. Also note that the RSI indicator has been dropping for the past 4 hours and has corrected now below the reading of 70. Actually, right now it's, give me a sec, at 64 and dropping. And that may feed the bears even further, i.e. force them to drop below the S1, 31,180, and start aiming for 30,450. Let's interrupt, and we have a question about XAU USD. No, we have not. Actually, today we're about to have a full report on gold, but since we're on it, let's have a look at gold as well. Okay, that's interesting. Okay, people. Now we have gold's price, which was on the rise up until that should be Friday. Yep. And since Monday has started some stabilization, but the latest candlestick tends to imply that there are some bearish movements in force here. Also note that the RSI indicator is dropping, actually has dropped below the reading of 50, is still close by. It's currently at 44.6. I would expect the bearish tendency to continue, in which case we may see the price action of gold's price clearly breaking the 1640 and start aiming for 1615. However, for the bearish outlook to prevail, we have to see a clear breaking of the S1. What we're seeing right now is not enough. I wouldn't be satisfied to adopt a bearish outlook only from that movement alone. Let's drill down to the 1 hour chart though. Have a look at the details. Yeah. Clear bearish tendencies. Once again though, I would like to see whether the S1 will be holding its ground or not. If it holds its ground, we may see the downward movement being reversed and the stabilization to be maintained. Once again, we would require a clear breaking of the S1 1640 before adopting a clear bearish outlook. But the possibility is there, yeah. In such a case, I would be skipping this level here. You note this. You can see it also somewhere here. No, in my opinion, the next possible stop for the bears would be the 1615 support level. That would be the next possible stop. On the other hand, though, note how the price action of gold is dropping despite the Bollinger Bands and the Fendi moving average keeping or having an upward slope. Very, very interesting. So that should sum it up for the day. From all of us here at IronFX, best wishes for solid trading.
Hello and welcome to another educational video. As part of our technical analysis series, we would like to look at support and resistance levels today. The points where supply and demand forces meet are represented by support and resistance. Prices are influenced by excesses in supply and demand in the financial markets. Supply is a term for selling, being bearish and being a bear. Demand is the same as buying, being bullish and being a bull. Prices rise as demand rises, whereas prices fall as supply rises. Prices fluctuate sideways when supply and demand are equal and bulls or bears compete for dominance. Let's see what support is. The price level where demand is strong enough to stop further price declines is known as support. Buyers are more likely to buy as the price approaches support and gets cheaper, while sellers are less likely to sell. It is anticipated that once the price reaches the support level, demand will outweigh supply and keep it from dropping below it. On the other hand, the price level where selling is strong enough to stop the price from going any higher is called resistance. As the price increases toward resistance, sellers are more likely to sell and buyers less prone to buy. When the price reaches the resistance level, supply is thought to overcome demand and stop the price from heading above resistance. Support and resistance mirror each other as they share enough common characteristics. According to another principle of technical analysis, resistance can change into support and vice versa. If the price goes below a support level, then the broken support level acts as resistance. When a support level breaks, it means that the forces of supply have triumphed over those of demand. As a result, there will probably be more supply and resistance if the price returns to this level. On the other hand, resistance can become support if the price moves higher than resistance, signaling a shift in supply and demand. The breakout above resistance demonstrates that the forces of demand have overcome the forces of supply. If the price returns to this level, a rise in demand and support is expected. Thank you for watching.
My name is Desmond Leong. I run an award-winning research firm, our Everest Fortune Group. We are finalists for Best FX Research and Best FX Research for 2019, 2020, and 2021, and also Best Equity Research for 2020 and 2021. Right, so we got a whole bunch of awards. We got a strong team of traders over here. Over time, you'll be seeing me. You'll be seeing this other girl called Cassandra. You might be seeing this other girl called Annabelle. Right, they'll be all coming in and sharing webinars on different levels. Right, but for today, you have me. Right, and I will be teaching you. I'll be guiding you on how to be a better trader. And as you can tell from my picture, from my video, I'm not that old. Right, pretty young guy. Right, trading full-time for a living, right, running an entire team, entire prop trading firm here. And if there's any word of encouragement I want to share with you guys, is that you don't need to spend 30 years, in Bloomberg or in the industry just to be a good trader. You just need to spend 30 days learning the right stuff to be a good trader. Okay, you don't need 30 years, you just need 30 days learning the right stuff. And the thing about trading, right, I just want to set the tone for all of us who are beginning this journey together with me, right, is that trading is very different from the world of academia, right? So, when we're studying, when we go to schools, right, when we go to class, right, when we take exams, right, how much we study usually is directly positively correlated with how good we are going to do, right? The more we study, the better we do. It is very, there's a correlation there. And therein lies the problem with trading, because a lot of us who are good at studies, right, they think that, all right, we are good with studying, so we should ideally be good with trading, right? The more I read on baby pips, the more I read on Forex Factory, the more I'm going to trade better. Right, but that is far from the truth, because in the world of trading is very different, right? You need to throw in your emotions, right? And you need to learn. You can learn the right stuff, and equally, you can learn the right stuff. And the scary thing is that you can learn the wrong stuff. Okay, you can learn the right stuff and you apply it wrongly, and you end up losing money. Right, so that's how trading is. It's very different from the world of academia. We cannot associate knowledge with profitability. Okay, we cannot associate knowledge on how to trade Forex, all the different trading strategies, all the technical indicators, stochastic RSI. We cannot associate that with being a good trader. Okay, I can teach you a very advanced stuff like Elliott wave. Right, I can teach you Elliott wave. Right, but if you try to apply it to a different style of trading, like maybe apply it to a single instrument, you're not going to make money, because Elliott wave requires you to look at the correlation of all the markets, for example. Right, so it's a very, very dangerous thing that we're looking at over here. In trading, you need to learn the right stuff, and you must avoid learning the wrong stuff, and must avoid applying the wrong stuff. Okay, and in this webinar, I'm just going to share with you my journey. How I've went from literally nothing to being a good trader, right? It took me over 7 years. I learned the right stuff, I learned the wrong stuff, right? I blew up many accounts, right? And how I finally reached a stage where now, I run an entire prop trading firm, trading profitably, right? I learned from the best previously. I'm going to share these things with you. I'm a heavily technical trader. I focus a lot on technical analysis, right? And I'm going to share and try and impart as much of this knowledge as I can to you. The scary thing I do want to share with you is that most of what you find online, right, is not the right stuff. Amazingly, it's not the right stuff, right? You might find stuff on baby pips, Forex Factory, you might find stuff, this Investopedia, right? they have an interpretation of, for example, how to use a very simple stochastic indicator. But my take on it is very, very different from it, right? Because I found that a lot of what the world teaches tends to be from the wrong point of view. It's a very, very retail kind of point of view, right? I'm going to share with you from an institutional perspective, right? How we look at technical analysis, how we look at fundamental analysis, how we look at trading strategies. We're going to debunk a lot of different a lot of different approaches to trading. Like a lot of people like to use a fixed stop loss and take profit, but that is the worst thing to do, for example, right? And I'll be sharing with you that in the upcoming webinars. I'll be showing you how to get access to it in a bit, right? But if anything, I just want to set the tone for you guys that, you know, you don't need 30 years to be a good trader. You just need 30 days learning the right stuff, right? And we have a very special partnership with IronFX where zero compromises and bring you guys the best education you can get, the stuff that you probably need to pay a lot of money out there, right? A couple of $1,000s just to go through, you know, bring it to you guys. Let's make this fun and interactive. There's a chat section there for you guys. If you have questions, I recommend ask them right away, right? I literally have another screen open over here. I'm monitoring the chat that is coming through. Right? I'll do my best to answer them when I can. Right? Because usually by the end of the webinar, we hardly have any time to answer any of the questions, right? So if you have anything that pops up halfway through, just send it through, all right? Now, let's begin to this session, right? What is the agenda for today? A few things we're going to touch on, all right? Introduction to the world of trading. You know, what exactly is Forex, right? I'll be showing you a little bit about my take on it, right? Explaining it in very layman terms for you guys to understand, because honestly, I am not a big fan of I'm not a big fan of jargons, right? I'm not a big fan of making things complicated, right? The big words out there. I like to keep it simple, and I want to show you that, you know, if we keep it simple, you know, it's very simple. Trading can be very simple. All right. So be filtering through the noise of jargons, you know, and then we're going to answer some key questions that many people usually have when it comes to trading. You know, how much time do you need to trade, right? Do you need to trade 8 hours a day, right? Do you need to trade 4 hours a day to be a good trader, right? What kind of trading strategy is the best trading strategy? Scalping, day trading, swing trading, you know, what kind of strategy is the best, right? How much time do you need to really master trading? You know, and how do you go about mastering trading? Is there a step-by-step plan, right? I'll be sharing with you that later. Very exciting stuff. Which products should you focus on? IronFX offers a lot of products to trade, right? A whole wide range of them, you know, FX commodities, indices, right? So many of them, but what products should you focus on to trade, right? And, you know, what trading strategies work better for which products? We'll be touching on it later, right? But if you have questions, shoot them right through, all right, guys? And then lastly, you're going to touch on, if you have time, you know, different approaches to trading, okay? Now, let's continue on to the session. Okay, bear with me. Sometimes I talk too much, I talk too fast, and so I lose my voice, right? Okay, let's begin to the session, all right? So what exactly is Forex and how does it work? So the short answer to this is that Forex is actually, if you think about it, right, now that the borders are open, I'm not sure which countries you guys are from, right? But now that borders are open, we might be traveling around. We might be traveling around a bit, and the places that we're going to see is we're going to see the money changers, right? There are so many money changers around, and that's the amazing thing. Forex is essentially just like money changers, okay? It is exchange of currencies from one currency to one foreign currency, right? Well, foreign currency to foreign currency, right? Local to foreign currencies. Basically, you know, what is Forex? It's just foreign exchange, right? Now, taking one money and giving it to another person. Let me put it into a form of an example of something which we might be very familiar with, right? Because, you know, maybe you're exchanging some money to go on holiday, right? So let's talk about a scenario over here, right? Maybe I'm in the US, right? I'm in the United States, and I want to go to Japan. Okay, I want to go to Japan, right? I have $1,000 with me now. Okay, I have 1,000 USD with me. Okay, 1,000 USD. I go to the money changer, and I get $100,000 yen, right? $100,000 yen, as you can see over here, right? This is before the holiday, okay? I go on a holiday, right? So I'm now in Japan, right? I'm going to Japan. I'm on holiday. I'm eating sushi. I'm eating my sashimi. I'm eating my well, not wasabi, right? Just eating all the different food I have, right? Eating all the different food I have, having my time of life in Osaka, all right? And now I come back from the USA, right? No, I come back from Japan and I come back to the USA. Okay. Before I went to the USA, before I went to Japan, one USD equals to 100 yen. One USD equals to 100 yen. When I come back from the Japan, now my one USD is equals to 110 yen. Okay. I still have my yen with me now, right? I have not changed it back to USD. Okay. I have not changed it back to USD. Guys, if you can, you want to try it, take a shot, right? I can see Donald raising his hand, right? Did we make or did we lose money? You know, with one USD is now stronger. One USD is now worth 110 yen, right? And we just came back from Japan. We want to change some money, right? Did we make or did we lose money? Anyone want to take a guess, right? Anyone want to take a guess whether we made or we lost money? Right? I know it's you guys can send me the answer, you know, directly to a host and panelists. You can send to everyone, right? It depends whether you want to show it everyone, you want everyone to see it, or you want to send it in the. I know some of you guys in Q&A. If you want to send it in the Q&A, that is perfectly fine too. All right. But what I want to share with you guys is that if what happened basically is that the USD strengthened, right? The USD strengthened. So now previously your one USD, right, is worth 100 yen. Now your one USD is worth 110 yen. So you can get more Japanese yen with a single US dollar. Correct? You can get more Japanese yen with a single US dollar. But the problem with this, so that means the yen is weaker and the USD has strengthened. In this time where we are away in Japan, the yen has, you know, it has weakened and the US dollar has strengthened. The problem is that we have yen, right? Hey, Kakana, nice to see you tuning in from South Africa. Welcome, right? Thanks for joining us, right? So yeah, the problem is that we have the yen, so we need to convert it back to USD. And because the yen is now weaker, right? That means, we can exchange it for less USD. So even though our base currency, we feel like, oh yeah, USD has strengthened, but if we were holding onto the wrong currency at that point of time, right, we end up losing money. Okay, so in this particular scenario, we have lost money, right, because we're holding on to the yen. However, if you think about it, it's very close, However, when we came back, right, while we are coming back, before we reached back home, we converted the yen, right? We converted the yen to USD, and by the time we came back, then it strengthened. Then we have made money, right? So this is very time sensitive, right? The whole concept of foreign exchange, is very time sensitive. Okay. Now, all right, Darlington, nice to see you guys tuning in from Nigeria. Welcome to the webinar, right? Nice to see you guys here, right? Hope you have a good time, right? A good time. If you have questions, remember send them through right away. I can see your messages come through, right? So I'll do my best to answer them all along the way. All right. Now, right, Cyril, nice to see you guys. Nice to see you from South Africa. Well, a couple of guys from South Africa. I'm just curious. I can see quite a number of you guys in this webinar. Could you guys share with me which countries you guys are tuning in from, right? And if you want, you can guess which country I am from, right? So I'm pretty sure not many people can guess which country I'm from, right? But yeah, it's you can share with me which country you guys are from. That'd be pretty awesome. Okay, right? Wait, is it Natalia from London, UK? Oh, that's great. That's great stuff, man. Welcome to the webinar. We're another person from South Africa, right? Mokonoto, right? Quite a number of you guys tuning in from South Africa. That's nice, right? So anyway, I'll just slowly continue on the webinar, right? Feel free to chat in the chat panel. Okay. Now, deciphering jargons. Okay, one thing I want to do, right, is I want to decipher as much jargons as possible, right? And if there's any jargon which you guys are not familiar with, send it in the chat section. I will do my best to answer them, right? If there's any stuff that you might have encountered recently and like, man, what does that even mean, right? Just send it. I'll do my best to answer it. Right, Carlos from Oxford, UK. That's nice, man. That's nice. Right, we got Nutuli, right, South Africa. Right, Guva Mombe from Zimbabwe, and we got Fatima from Philippines. Oh, that's very nice. Now I went to Philippines a couple of years back. Yeah, I went to Philippines a couple of years back. I think went to Smoky Mountains or something, or some kind of a mission trip or something. Right. Yeah, it's Philippines, really nice place. Right. I love Jollibee from there. Right. All right, man. All right. Now let's continue today's session. All right. Deciphering some jargons. Okay. Now, so okay. Pips, right? We always see people talk about pips, right? Like, hey, I made 10 pips, I made 50 pips, right? In trading. Now, when you see pips, the only thing you need to know is that they are referring to literally kind of points, right? So there are two kinds, right? Anything that ends with /JPY, right? So you can talk about AUD JPY, USD JPY, blah, 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 /JPY. And you can talk about all those that end with /USD or /anything else, right? Most of them, right? A pip refers to the 4th decimal place, right? This is a pip, right? This is a pipet, but people rarely say I made 1 pipet or something, right? People rarely say that, right? Most of the time people will say I made 0.1 pip, which is equal to 1 pipet, right? So when someone says, oh, price has went up by 10 pips, right? It basically means that price has went up, to 0.010, right? This is 10 pips, right? The 4th decimal place. The 4th decimal place, each one is, 1 pip. So if it goes up 10 pips, it goes up to here, becomes 10 pip over here. For yen, it is the 2nd decimal place, right? Over here. So anything with a yen, if it says you go up by 1 pip, you're referring to the 2nd decimal place. If you go up by 10 pips, you basically means that it goes up to, 0.10. Okay. Yvonne from South Africa, welcome. Thanks for joining us, right? Very fun session, right? We are pretty fun session in this webinar, all right? So yeah, so people talk about long or short, right? Long means you're buying, short means you're selling. That's all you need to know. Okay? Long means you're buying, short means you're selling. That's all you need to know. Hawkish and dovish, it means 2 different things. Okay? Hawkish basically means that it's hawkish. People who are hawkish, they usually are in favor of currency appreciation. They want the currency to strengthen. They want interest rates to increase, right? And their objective is to reduce or kind of contain inflation, right? For people who are dovish, right, they are usually on the side of currency depreciation, meaning they want currency to get weaker. They usually want the interest rate to decrease, right? And usually the objective of doves is essentially to stimulate the economy. Okay. Now, that's all you need to know about hawkish and dovish. You see people throwing around a lot, right? Usually it's just, people who are hawks, they want the currency to strengthen. Think about hawks, they like to be very aggressive. They want currency to strengthen. They want to increase interest rates, right? Attract more, they want to increase interest rates, right? And people are dovish, they're milder, they want currency to depreciate. They want the interest rates to decrease. Okay. Now, lot size. Lot size is basically a lot size you use to trade. So when someone says, how many lot sizes do you use, when you trade? You're like, oh, yeah, I put in 0.1 lot, 0.2 lot. They're just referring to, to MetaTrader 4, MT4 when you take a trade. Okay. Because the MT4, they use lot sizes to trade, right? Major, minor, and exotic currency pairs, very simple. Majors are anything with /USD behind. Okay. Or have a USD in it, like USD /JPY, USD CHF, right? Anything with USD in it, we consider it a major. I know it's a little bit biased, but but apparently anything with USD in it is considered a major. Minors are anything with usually any of the other currency pairs, other I think it's G8 or G7 currency pairs, right? We're looking at the AUD, right? You're looking at NZD, you're looking at GBP, right? So if you're looking at GBP AUD, GBP JPY, NZD JPY, all of the other stuff that doesn't have USD in it, we consider it as minors, right? So someone say, sometimes people call it minors, sometimes people call it crosses, right? But sometimes when you hear people say, yeah, you know, it's I'm trading, I only trade majors, I only trade minors, right? You're like, wait, why in the world are you talking about major or minor, right? It essentially just means this: majors, anything with a USD in it; minors, anything which is more any of the other crosses, the major G7 countries. And exotic currency pairs are those that are a little bit more exotic: South African rand, right? Dollar ZAR, you know, all these China yuan, right? All these different not so popular ones, right? We consider them exotic currency pairs. Okay. We talk a little bit about, you know, there are three major sessions that look at: Tokyo, London, and New York sessions, right? These are the times when there's a little bit more liquidity, so to speak. Right, London and New York overlap. We call it as overlap. Before the markets close, there's actually a time where they overlap. That's where there's a lot of volume, right? But that does not mean it's the only time to make money there. There are many ways to make money in trading, and today I'll be showing you, giving you the foundations of, you know, giving you the foundations of how to do that. All right. Anyone who says bullish means you're going up, bearish means you're going down. Okay, simple stuff. Don't want to jump too much into it. Safe haven. Safe haven is basically, how do I explain it, right? Safe haven are places, are instruments where people flock to, you know, when things are risky, right? You're looking for a safe place to go to, right? And that's what kind of safe havens are for, right? So for example, Russia and Ukraine war, right? Man, things are heating up. People are like, oh, could this be another world war? Right, is this going to be rather scary? Right, if it's a little bit scary, what they're going to do is like, I think this is a little bit too risky for me. I want to put my money in a safe place. So what are these safe places, right? One of it is, of course, gold. When everything collapses, when all the world's economies collapse, if you hold on to a bar of gold, there's you know, this gold does not have a country it belongs to. Gold is just gold. It's pure material. It's heavy. How much is worth its weight in gold, right? There's a popular saying: it's worth its weight in gold, right? So gold, you know, is the safest so-called thing, safe haven. And then there are currencies which are safe havens, like the USD, right? You know, because people think the United States is so huge, there's no way in the world that the United States can collapse, right? So people think of the US dollar as a safe haven. People think of the franc as a safe haven. Switzerland, people think of Japan as a safe haven, right? People even think of the Singapore dollar as a safe haven, right? You know, these places are very safe, right? Very safe, right? So safe havens, you know, are basically places where people, you know, when the going gets tough, when the going gets risky, right, it attracts a lot of attention. All right. Another thing that we look at is, of course, risk on, risk off. Basically, you just think about risk on, risk off. In a sense, like risk on means there's a lot of appetite for risky stuff, right? Let's go into Bitcoin, right? Let's go into equities. Let's go into Tesla. Let's go into the stuff that are a little bit riskier, right? But when people say risk off, right, basically means that you think about a switch, like you're trying to turn the switch off. Risk off scenario, let's play it safe, right? Let's go. What happens risk off? You don't have the appetite for risky stuff. You go to safe havens, for example. So you can see how they're related over there, right? Bid and ask prices, right? You sell that bid, you buy ask, right? You know, that's basically the spread. You know, when people talk about spread, it's the difference between the ask and the bid price, right? It's a difference between the ask and the bid price, bid and ask price, sorry, right? So this thing in between is called the spread. Liquidity, very simple. Liquidity just means how you know, how much volume there is in a particular kind of instrument. Okay, what I mean by that is, if you wanted to sell your iPhone, right? If you wanted to sell your iPhone, there will be a lot of, you know, you go to any of these places where you can sell second-hand phones, right? You go to any of their and say, I want to sell my iPhone. There's easily a lot of buyers who want to come in and say, yeah, sure, I'll buy your iPhone. This is the price I offer you at, right? And the prices all tend to be pretty close to each other, right? So if you have a very popular product, like a major, you know, major currency pairs, popular products, a lot of eyeballs on it, a lot of people trade it, right? Like an iPhone, you know, you want to try to sell it, people can easily come and tell you like, okay, I'm going to offer you this price, and they're not going to differ that much from each other, right? But if you have a Nokia, right? You have a Nokia 3210, right? One of these old Nokia phones that you have, right? And you're like, hey, you know, you go out there and say, anyone wants to buy my Nokia, right? People are like, what? Some of them might be saying, what the hell is that Nokia? You know, what is it even, right? It's like, oh, it's a handphone. No one even knows it's a handphone, right? And then the prices, you get a lot less people coming up to you, giving you offers, right? A lot less people want to buy it. And even if people offer to buy it, one person saying, maybe I'll buy it off you for $50, right? Another person buy it off you for $100, right? So the prices differ a lot because there's less liquidity, essentially. Less people interested in trading market, less liquidity there. More people interested, right, in trading Tesla and trading euro dollar and trading this kind of big currencies, right? The more liquidity there is, the better your spread is. Okay. Last thing I'll touch on is slippage. Okay, slippage basically means, you know, when you want to enter into a trade, and the moment you press the button, right, when price, you know, might go against you or for you. Imagine, right, if your price is like falling, price is falling, right, and you decide, okay, I want to sell, right? You click here, sell here, right? Price can either go down or go up, right? So if there's negative slippage, it means that you got in a position that's not as good. You wanted to sell here, but you got in over here, right? Positive slippage is that you wanted to sell here, but you got in over here, right? Got in slightly better, right? So usually in trading, slippage is a common thing. Slippage is everywhere. Sometimes you'll be slipped, slippage is positive. Sometimes slippage is negative, right? It affects both ways, right? But slippage always happen. All you know is that what slippage means is that when you enter a trade, usually it will, there's a little bit of time between from the moment you press that button, the button, right, to the time you actually get into the trade, the little bit of time difference, right, that's where slippage can happen. Now, of course, if you want to reduce slippage, some of the things that you can do, get a good internet connection, make sure, some people have VPS, virtual private servers, which the servers are closer to maybe IronFX trading servers, so there's less latency. I'm not sure if many of you guys ever played games before, but you know, imagine you're playing a game, right? So they talk about lag, they talk about latency, right? So if you are playing a game and you're playing against this person who is on the other end of the world, right, and you two try to play together, right, it becomes very slow, right? You know, you do something, you know, it takes him a few seconds before he sees it. He does something, it lags a bit before you see it, right? So, but then if you are playing a game and you're right there beside, you know, your friend who is playing right beside you, you're both looking at the same screen, same TV, and you're just playing, right? There's almost zero, yes, practically zero latency, zero lag, because you two are very close to each other, right? The further you are, you know, the more latency, the more lag, the more slippage, right? So that's the concept you need to wrap your head around, that you can actually reduce slippage through these ways, right? Of like getting good VPS that's near your broker server, stuff like that. All right. Okay, let me pause a bit. Of course, guys, if you have questions, please, I encourage you guys to send it through. All right, don't wait until the end before you send it through. I'll do my best to answer them. Okay. Now, the opening hours of Forex, right? Why is it a 24-hour market? How people are thinking, how in the world is Forex a 24-hour market? It's very simple, right? At the start of the day, right? Sydney gets up. In fact, Sydney gets up even if you're looking at GMT time like here, right? So when Sydney is up, Tokyo gets up slightly later, right? Tokyo gets up slightly later over here, right? So Sydney and Tokyo are awake in the morning just before Tokyo closes, right? You got London getting up, right? So this is that's actually pretty sweet spot. Tokyo London overlap, right? Actually, it's not just Tokyo, right? Many of the other countries out there, right? Asian countries, they overlap with London like now. Right, for us, you know, Singapore, I'm based in Singapore for anyone who wants to know, right? There's a little bit of overlap, so there's a little bit of trading volume, right? Before London closes, US wakes up. And this is the US London overlap, very popular for a lot of trading volume, right? So we got a question from Darlington asking, what is the best time to trade, right? Very good question, right? And actually my answer to that, what is the best time to trade, is that there's no best time to trade. Okay, there's no best time to trade. You trade when the market gives you the opportunity to trade. During these periods of time, you have more trading activity, right? There's more trading activity, but that does not mean you can only trade during that time, right? You might be able to find a trading strategy over here, and then the trade gets carried on all the way until here, right? Even though there's the most volume there, that does not mean it's the best time to trade. It just simply means the market is the most active there. You could take a trade, and then you can it might get triggered, when it reaches this time, but that doesn't mean that you don't trade. You only wait until, okay, the markets are open, like there's a US London overlap, time for me to trade. That does not mean it. It's in fact not best trading time, but it's actually most volume in trading, the most active trading time. It does not mean best. Okay, probably I will probably replace this with most active trading time. Okay, because I don't want to give you the idea that this time here and this time here are the best times to trade, because I've made a lot of money, right? Not trading these times, right? There are other ways to work around it. Okay, I hope that answered your question, Darlington. Now, moving on to the next one. Where's my PowerPoint slide over here? Moving on to the next one. How much time do you need to trade? Okay, so anyone want to take a guess, right? Or can you guys share with me how much time do you guys usually allocate to trading every day, right? Like how much time do you guys have to trade? Do you guys trade 1 hour a day? Do you guys trade 3 hours a day? Are any of you guys full-time traders trade 8 hours a day, 16 hours a day, right? Can you guys send it in the chat section? How many hours, so the rest of you guys can see it too. How many of you guys, how much time you allocate to trading every day, so I can get a rough gauge on like what kind of strategies we can work on, we can look at together. Natalia, do you trade 24 hours or do you trade 2 to 4 hours? Not sure if you meant 24 hours, right? Right, we got Cyril, right? Trading an hour a day, right? Mahoda, wow, 8 hours a day, that's nice, right? We got Lama, a day trader. Day traders, I guess, well, day trader is the trading strategy, but how much time do you have in a day to trade? It also depends, right? Right, we got Sarero, 5 hours is pretty decent, right? We got Kanaka, right? It's 5 hours. Derek, want to start trading only on New York session? I'll touch a little bit on that in a bit, right? 2 4 hours depends how busy your day is. All right, I got it, right? So I notice most of you guys got a couple of hours a day to trade, and that should form the basis of your trading strategy. Okay, now sometimes a lot of people ask me, what is the best trading strategy? Should I be a scalper? Should I be a day trader? Should I be a swing trader? Should I be a position trader? What kind of strategy will make me the most money, right? And I can share with you this, that there are many strategies that's going to make you money, but it has to suit your trading style, right? If I told you that if you only had, like for example, Natalia, right? If she only has 2 hours to trade in a day, and I recommend her a trading strategy that requires 8 hours of constant monitoring of the market to trade, she's not going to do well, right? Because she's like, she only has the 2 hours, maybe 2 hours in the morning, 2 hours in the evening, right? Maybe you only got a little bit of time to trade, but how are you going to use that? If I told you that I have this trading strategy that requires you to trade 8, 10, 12 hours a day, right? You won't be able to do it, right? And there are trading strategies out there which only require you to put in 1 hour in the morning and 1 hour in the evening, right? You can be a profitable trader already. Different kind of trading styles, and it also needs to fit your kind of trading personality, your psychology, your risk tolerance level. For example, I've been trading for a long time, right? I have good trading psychology, right? But the problem with it is that, I still find it very hard, right? I still find it very hard to hold a trade overnight, right? I still find it very hard to hold a trade overnight. When I take a trade, right, I sometimes wake up, I sometimes wake up in the middle of the night. I'm like, oh shoots, did I make money? Did I lose money? So I have dreams. I have nightmares sometimes. Nightmares, right? That I got stopped out. I sometimes wake up, it's like, did I, my subconscious in my mind, is running, thinking, did I make money? Did I lose money? Right? It keeps running, and it's so scary, right? That's a scary thing when you and I know when that happened that I cannot take trades that last longer. That I cannot hold trades overnight. Even I know all the risk tolerance, I know all the trade management, I know risk management, I know all of that, right? But my risk tolerance, I just does not sit with me that I can take trades overnight. So I might want to be a swing trader, but my risk profile, right? The way I'm built is not able to be a swing trader. That's why I need to look at day trading. I need to look at scalping. I need to close off my trades within the day, right? So then I need to look at trading strategies that suit my kind of personality. So that's a tricky thing, right? I can see Sheriff asking, I trade most midnight, right? Is it well, right? It depends which time of the day, which country you are from. I think, if I'm not wrong, you mentioned previously, was it South Africa, right? One thing I want to recommend to you guys, right? Sometimes, it might not be a good idea to trade too late at night, right? Because think about it, our brain, right? Our brain is like a muscle, right? This is a little bit of trading psychology I want to share with you guys. Our brain is like a muscle, right? Have you ever exercised before? You're exercising, maybe you're doing bicep curls and stuff like that, right? You do the first 10, right? You can do it. It goes to 15, it gets a little bit tired. Do a little bit more, 20, your arms get really, really tired. And, the more you do it, the more tired your arms get. And it reach a point where you can't even raise up your arm anymore because you're so tired, right? And the brain is that way. You spend most of your day thinking, doing work, going to work, taking care of the family, cooking food, right? Taking care of the kids, driving around, right? And towards the end of the day, your mind, your mental processing power, right, is just not as strong as anymore, right? It's it's tired, right? It's like the brain is like a muscle. Have you ever came back at the end of the day and just like, man, I am exhausted. I just want a beer. I want to sit down, take a drink, relax my mind. I don't want it anymore. That is your mind. That is your mind being tired, right? So imagine your mind is being tired and it's the middle of the night and you want to start trading, right? That is actually pretty dangerous because the market is tough. People, the hedge fund traders, right? They go in with, they even meditate before they come in. Their mind is all bright and they really take on the markets, right? And they need to take it on with having that alertness, right? So sometimes it's a little bit tricky when you take on the market at night. There's nothing wrong with the time of the day we are trading it. It's more important like what is the state of your mind? Is it strong or is it weak? Are you tired or not? Because you're tired, you might compromise on your trading strategies. However, if you work the night shift, right, you're gonna trade in the middle of the night, then it's fine. You know what I mean? Right? Oh, okay. Africa, Uganda, not South Africa. No, sorry about that, right? But nice to see you tuning in from Uganda, right? Yvonne is saying that it's getting yes, Yvonne, we will be uploading this on YouTube, right? So go check out the IronFX YouTube channel. I'll be showing you guys how to get access to it. So in case any of you guys have internet connection issues and drop out a bit, this recording, it won't be uploaded right away, but you can find it over there on YouTube. Okay, but how much time do you need to trade, right? So I got all different answers coming in, right? But I want to share with you that scalpers usually you usually need the most time in the day to trade. Okay, scalpers need the most time in the day to trade, right? So we're talking anywhere in 4+ hours to trade. You need to dedicate that much time. Okay, swing traders, if you ask me, need anywhere from 30 minutes to 1 hour, right? You should not need too much time to trade. You look at the markets a little bit every day, should be enough. Okay, if you're a day trader, you need at least more than 1 hour to trade. You look at the markets, at least 1 hour in the morning, 1 hour in the evening, so maybe a total of 2 hours, right? And if you're a position trader, maybe you don't need that much time. You just need 15 minutes every day. Check your charts, make sure everything is right. And it's for it's a long-term kind of thing. You don't need to dedicate that much time to trade. So depending on the time availability that you have, on the answers that you gave me earlier, right, it can give you two different, what's the word for it? It can give you two different kind of, not say two, four different kind of choices on like the kind of trading style that you want to use to trade, right? If you have a lot of time to trade, you can consider a combination of day trading, swing trading, like a dear friend Natalia, 2 to 4 hours. You can do a combination of day trading, swing trading. You can even do position trading and scalping if you want. But if you only have that little bit of time, half an hour to trade, right, you might want to consider swing trading, right? You don't have that much time to trade. You might want to consider swing trading. You might want to consider position trading. We're going to teach you all these different kind of trading strategies which you can use in trading, right? And how you can apply it across the different time frames. Okay, so that's an important consideration to take note of. Okay, now I do want to touch a little bit on this concept on how much time it takes to master trading. Okay, a lot of you guys, I'm not sure how many of you guys, how long it has been since you guys have started trading, right? But I shared this a little bit at the start of the webinar. I want to share it again over here right now because I see a lot more, about double or triple more attendees have came in. That I'm a young guy. Okay, I'm a young guy. I'm 32 years old, right? I just became a dad 3.5 weeks ago, right? So I run an entire prop trading firm, right? Trading full time, right? And I do want to tell you that you can be a profitable trader. You don't need. I know I'm not here with like, you know, in a big suit and stuff, right? Saying that I have 30 years in Bloomberg or Thomson Reuters and that you need all this experience to be a good trader, right? I'm here to tell you that, you know, I've went down the path of blowing up account after account after account, total of about 7 accounts. You know, I traded for a long time, many years, right? I think close to a decade. I learned the wrong stuff. I learned so much of the wrong stuff so that I can finally filter out and know what's the right stuff to learn, right? And I want to let you know that you can be a good trader in just 30 days, right? You can learn the correct knowledge in 30 days to be a good trader, but you just need to practice it. You need to practice, you need to practice, you need to practice it to be a good trader, okay? Learning is one thing, trading is another thing. That's an important thing I want to let you know. Learning is one thing, theory is one thing, and trading is another thing. And that is why I want to take this opportunity to let you guys know that this new series we have with IronFX, thank you very much. Thank you very much, guys. Yeah. Thank you, Lama, right? Thank you, Sarun, Kumar, Sharif, right? Yeah, it's I'm now a dad, so not sure you can see my eye bags, but maybe tomorrow, maybe the day next week, you start seeing me have like really mad eye bags because you know, oh man, I never knew a baby could have like, you know, could drink that much, can poop that much, right? It's crazy, right? Now I'm able to even trade the US session because I'm stuck awake all night. But yeah, it's a bundle of joy, right? It's 3.5 weeks, haven't reached his first month, right? So yeah, it's gonna be a fun time, right? But now it's important thing that I want to share with you guys too, that IronFX, you know, we are dedicated, right? This to really helping you be a better trader. How are we gonna do that? What I'm teaching you today is the theoretical session. We're teaching you theory. But the great thing is that tomorrow we have a live trading session. Very exciting. Let me just show you how to get access to that. Okay. Live trading session. Bam, coming here. Right. I'm going to come here. You want to go to ironfx.com. Okay. You want to go to ironfx.com. You want to go to, just let it load a bit. I believe it's, where is it? Schools. IronFX school webinar. Right. Webinar. You can see that does not look like me. Right. But yeah, you can come down here. Click on English. Live trading session tomorrow. Okay, live trading session tomorrow. That's where I take on the markets together. It's very exciting stuff. I'll actually share with you some of the juicy trades that I have found, right? I'll be showing you how we actually take on the markets. You'll be looking at the way I do charting, right? Do analysis, right? Do Fibonacci, retracements, extensions, expansions, support, resistance, trend line, right? Channels, right? Correlation. I'll be doing everything, right? You'll be watching me trade live, and you can also ask me if you have a request on euro dollar, you have a request on Aussie dollar. You know, that'll be the perfect time where you can jump in. You can ask me, I can answer it, right? It happens same time, same place, right? I'm gonna copy this link address. I'm gonna send it to you guys, right? Same time, same place tomorrow. Please go register for it. Trust me, you're not gonna regret it. You know, we're gonna look at the markets. It's literally living and breathing the markets, right? We're gonna look at it. We're gonna trade it. It's gonna be a fun time. Right, gonna look at some juicy setups, right? We have a hit rate, I have a hit rate of 70-80%, right? Pretty good hit rates, right? Which I hope that you know, the great thing is that all these webinars are recorded for you to review, right? I dare to do that, right? I dare to stick my neck out there, right? Call the trades. If it's profitable, right? That's great. You'll see me in next week's session, right? We celebrate it together. If I make the losing trade, that's part of trading, okay? But we're not run away from it, right? And that's the level of that's the level of accountability I hold myself to, right? And of course, this is another sneak preview which I'll be showing you guys right now, which is the IronFX VIP room. and how you can get access to it. I won't be giving you guys the link to it yet, but I want to show you how it looks like, right? Because we should be releasing this over the next either tomorrow or next week, right? And it's a VIP room, right? As long as you're IronFX client, you get access to this. I'm going to share the screen with you right now. Super awesome stuff, right? New share. Okay, here you go. This is the screen. This is the IronFX VIP room, right? It looks like it's like a chat room kind of area, right? Where you can come in, right? We have a whole gamified stuff over here. So the more you post, right, the more you chat, you will rise up the ranks, right? As you rise up more ranks, you know, we're going to give you different prizes. Maybe give you different, like I have a lot of custom indicators I can give you there. But the important thing about this platform is that when you're IronFX client, and let's just say we're looking at euro dollar over here, right? We're looking at euro dollar over here. So I need to resize this, right? So imagine you have a question, right? You're looking at euro dollar and you're like, man, Desmond, is this a good time to buy, right? You come in here, you draw this support level over here, right? And you say, you know, hey, hey, Desmond, right? Is this a good support level, right? What support level am I referring to? Just need to highlight my text over here. Click on this button called link object to text. You will click on this button over here. Click on it. Okay, I'm referring to this horizontal ray, right? And go and click confirm. Now, what happens when you send this message through? Of course, you can see again a little bit of experience points up there, right? If I'm reading this message, or if you're reading this message, right, say, hey, Desmond, is this a good support level? All we need to do is to hover our mouse over this, and you can see it lights up. So I know exactly what you're referring to. So I can come into a little dedicated discussion with you, and I can say, yeah, you know, this happens to line up, right? Maybe this happens to line up with a, not sure you can see it. Yeah, it happens to line up with a 23% retracement, right? What 23% retracement? Highlight this, link it to this Fibonacci retracement. There you go, 23% retracement, right? Oh, sorry, send the message through. So you look at this, you know, can light up. That is a 23% retracement I'm looking at, right? And we can have a whole dedicated discussion on this over here. So we have, we're going to support the majors, we're going to support the miners, we're going to support the commodities, the gold, the silver, the oil, right? We're going to support the indices. You know, it'll be a whole nice VIP room where you can get direct access to me, the other IronFX analysts out there. You get to ask us questions on the markets. You know, we got to answer you, right? But most importantly, you get to practice what you learn. Right, you get to practice what you learn here, you know, in the Tuesday sessions, right? In the next few sessions, you're going to talk about technical analysis, fundamental analysis, go on and on and on. You know, we'll cover more advanced topics along the way, but it'll be a fun time where we're gonna can I show you all the webinars, right? Yeah, no, I think we haven't added the rest yet, but this is a place where you can practice your analysis to be a good trader. Okay, right? I won't be giving you the link to it, right? Maybe you can tune in tomorrow or next week, and I'll be showing, if it's ready by then, we'll release it to you guys, right, to get access to it. Okay, pretty awesome stuff, right? Pretty awesome stuff. Okay, but now let me just bring ourselves back to this. How can I bring it back? Yeah, let me bring back to the screen over here, right? And what I want to show you guys next, right? What I want to show you guys next is yes, how much time it takes to master trading. What I'm trying to focus on here is that, yes, I'm going to teach you, right? You just need 30 days to learn the right stuff, but you need to practice it. Where to practice it? Practice it in the IronFX VIP room, which will be giving you access to, right? And that is how you take your trading to the next level, right? Because you can be practicing, but if you're practicing and applying it wrongly, you know, it's not going to help you in your journey to be a better trader, right? We're going to teach you how to do that, right? It's going to be a fun time. So yeah, stick around with us, all right? Now, next thing I go to fundamental versus technical analysis, which is better, right? I do want to let you know that it's good to have a good understanding of both, right? Which will you choose? Depending on your trading strategy, it depends, right? Depending on your trading strategy, you might want to learn more fundamentals or you want to learn less fundamentals, okay? What do I mean by that? Okay, for example, if you are a scalper, right? If you're a scalper, right? Let me see. If you're a scalper, fundamental analysis is not that important to you, right? What do I mean by that? Let's just say you are bullish on gold, right? your fundamental view is that because of all the uncertainty in the world, for a long time, this market correction, has been coming, right? The Russia-Ukraine war being dragged out, you are bullish on gold, right? You expect gold prices to rise over the next couple of years. Now, that knowledge is not going to help you trade the next 5 minutes. That knowledge is not going to help you trade the next 1 hour on gold. It doesn't really help you that much. It'll help you if you're a position trader and you take a long-term trade on gold. You're looking at a 1 week, 1 month chart and you're taking a long-term trade. Yeah, that makes sense, right? But that knowledge is not going to help you if you're going to just take, okay, is gold going to go up or down in the next 10 minutes, right? If I'm a scalper, right? That knowledge is not going to help you, honestly, right? So that's the important thing I want to tell you, right? Fundamental analysis, it's important, but it all depends a lot on your approach to trading. Fundamental analysis is more important for position trading and swing trading, less important for scalping and day trading. In fact, if you're scalping and day trading, man, you need to really, really be good in technical analysis. You need to be very good in technical analysis, right? You want to be a good day trader, you want to be a good scalper, right? If you're a position trader, you need to focus less on technicals, more on fundamentals. Okay, how fundamental analysis is useful as a scalper, right, is what we call this thing called known unknowns, right? So let's see if I have it over here. Okay, IronFX, right, platforms, economic calendar, right? IronFX has a great economic calendar, right? I want you to take a look at it, right? And this is what I call known unknowns and how you can use it in trading, right? So IronFX economic calendar, right, over here, right? Go close this thing off here, right? Anyway, IronFX has this YouTube live event, live trading throughout the day. Great stuff. Go check it out, right? Some people say they can't see my screen. Are you guys able to see my screen? All right, I'm not sure if you guys are able to see my screen. I'll go pause for a second here while I wait for your answers. Yes. Are you able to see the IronFX economic calendar screen? Cool. All right. Maybe I was clicking the wrong stuff earlier. All right, but yeah, so this is the economic calendar, right? So let's just say we want to know what's going to happen tomorrow. Or yeah, let's just say today, right? What you want to major thing you want to look at here is volume. Okay, volume. So imagine if I'm trading, right? There's a big news event on here, right? The GfK consumer confidence, right? Or let me see if there's any others for today, right? Okay, GFA consumer confidence, right? Dangerous stuff, right? There's a lot of volatility here. If I'm a trader, I'm a scalper, right? I might want to stay out of this currency, maybe the euro, right? Right before this, because I might be right on the trading direction, right? But because of the volatility, I might be wrong, right? Price might spike me out and I might get stopped out, right? So that's a dangerous thing, right? Or that's the important thing about so-called fundamental analysis, looking at the economic calendar and knowing when the big news release is going to happen. For example, the first Friday of every month is non-farm payroll, right? If you were a scalper and you tried to scalp some trades, not knowing that non-farm payroll announcement was going to come, right? You might be correct, but the non-farm payroll just bam, go crazy. You get stopped out and you're like, whoa, what hit me, right? So known unknowns are important to be knowing when looking at the economic calendar will help you know when these news events are going to come and help you know when to avoid them, right? More important for scalpers. Day traders, the news events are a little bit more important, but it's very, very hard for you to predict, what the result is going to be, right? So as a day trader, unless you're really crazy about econometrics, trying to forecast this kind of data, it's really, really tough to do that, right? What you do well is to also avoid, if your trade is almost at its profit target level and you're reaching a big news event, you might just want to close it off first, right? Because it's not worth it. The big news event might cause price to go in another direction, right? Might go against you and it's just not worth it, right? You just want to close off your trade first. Okay, so that's the meaning of fundamental analysis is useful, right? But how you actually apply is very different, right? Longer term trading, yes, it makes more sense, right? In our technical analysis and fundamental analysis 101, which we're going to cover in the next webinars, right? I'll actually be showing you a little bit more about how we won the awards that we won by doing combination of fundamental and technical analysis. Very exciting stuff there. Okay. Of course, when it comes to trading, there are fundamentals. Basically, good economy means that money is going up. Bad economy means currency value is going down. Okay. And of course, technical analysis, whole bunch of stuff, but I don't want to focus too much into that. There's harmonics, there's gun angles, there's moving average crossovers and stuff. A lot of stuff that you can do, but some of it I agree with, some of it I don't agree. Gun angles I don't agree with. Okay, it's based off astrology. It's literally you're looking at stars to trade. I believe a lot in harmonics. I believe a lot in Fibonacci. I believe a lot in market structure, correlation, support and resistance, Fibonacci, right? We'll be going through that very, very advanced courses, beginner, intermediate, advanced down the line. I'll be teaching you how to use that to make money. Okay. I'll be teaching you how to use that to make money, right? But those will be in the upcoming webinars. Every week we'll be doing it. Sometimes it's me, sometimes it's going to be my other prop traders, Cassandra, and Annabelle who will come and do it. But for starters, right, I'll let you know that fundamentals basically you're looking at like the health of a economy. Technicals is more towards like this kind of technical analysis. Okay. And the last thing I want to touch on, right, which products should you focus on, right? Now, when it comes to trading, you can focus on a lot of stuff, right? So you notice that, of course, IronFX down here, when you talk about markets, there are so many different markets that you can trade, right? Where is it? You can trade Forex, metals, commodities, indices, futures, shares, a whole lot of different stuff. But remember guys, don't trade for the sake of trading. A lot of people trade for the sake of trading. Why is that wrong? What do I mean by that? Trade for the sake of making money. Trading is just a means to make that money. Okay, if there are no trades, don't trade. Okay, don't trade cryptocurrency because it's exciting. Trade cryptocurrency because it's going to make you money. Don't trade Tesla because it's the talk of the town. Trade Tesla because it's going to make you money. Remember what is your goal when you are trading. Okay, remember what is your goal when you're trading, because this is very, very important, right? This is very, very important when it comes to trading. All right, let me just see. Yes, yeah, it's very important when it comes to trading. You must know your intention. Okay, you must know your intention when it comes to trading, guys. Right? Now, which product should you trade? I'm going to focus a lot more on the liquid on those products which are a little bit more liquid. Right? I'll be focusing a little bit more on Forex. Right? But you can just easily trade Forex and metals. Gold is usually a good one to trade. Right? Forex, right? Usually focus on the majors and the minors. I tend to stay away from the exotics. Indices, really good one is the DAX, German DAX, right? S&P, right? NASDAQ, pretty good ones. Commodities, soft commodities, I don't usually trade it. Shares are actually pretty good to trade, right? But I tend to look at the major ones, right? The big ones, right? I'll be showing you how to look at it in future sessions, right? No worries, Sharif, right? I'm sorry. Yeah, feel free to send the questions now, so I'll answer them before we end off today's webinar, right? But yeah, it's I'll be showing you these are a whole range of stuff you can trade, but that doesn't mean you should trade everything. Okay, guys, don't just jump in and trade everything. Okay, don't just jump in and trade everything, right? I'll be showing you some of the things that technical analysis tends to work better on certain pairs. Fundamental analysis tend to work better on certain kind of instruments. We'll be covering that in the future topics. Okay, yeah, but I hope you found this session useful, right? I hope you found this session useful, right? We actually covered most of the webinar already, right? If you have questions like Sharif, please send them before I head off, right? But yeah, please send them before I head off. I hope you found this webinar useful in helping you be a better trader, right? Just let me see something over here. Yeah, just listen. Okay. Yeah, I hope you found this webinar helpful in becoming a better trader. What I want to encourage you guys is to tune in into the live trading session tomorrow, right? There'll be a great time for us to look at the markets together. Come prepared with questions, right? On any technical analysis that you need help with, any fundamental analysis that you need help with, any currency pairs, any instruments that you're currently trading that you want a professional advice on, right? Come prepared with it, right? And we jump on and look at the markets together. Okay. Now, otherwise, guys, Sharif, I don't think I have the message come through, but if you always then I know whether your Forex Academy, please. Then I want to know whether you Forex Academy, please, because new. I IronFX will be launching an academy in the next couple of weeks, right? So there'll be a pretty good academy. It'll be integrated maybe with the VIP room, right? I don't have a Forex Academy. I don't offer private training, right? We usually are institutions. I work directly with the institution. So usually if I invited guests, like for example, INFX, right? They invite us, a very special partnership with them. Then we come down and we teach you guys. Okay, I don't teach any other courses out there, right? Because I'm a full-time trainer myself. I don't have time to teach courses, right? And I don't want to take your money, guys, right? I don't want to take your money. I'm here on behalf of IronFX to teach you guys. So tune in, come on, man. Tune into the sessions, right? In the future sessions together. It'll be a fun time, right? It's free and it's very high quality. Okay, it's free, it's very high quality. And yeah, you get to ask me all the questions that otherwise people pay us thousands of dollars per hour just to have a consultation with us. Otherwise, I don't think it's something you want to do, right? Just as long as you're a client with IronFX, you get to benefit this. You get a benefit from this arrangement that we have with them. All right. Anyway, thank you very much, guys, for sticking throughout this webinar.
Everyone, my name is Emily. Today we're going to talk about account types. There are three main types of trading accounts available: a standard, a mini, and a micro account. The main differences usually between accounts is the level of fund investment needed, the size of the currency amounts that can be traded, and the risk associated with each trade. A standard account is the most popular account that offers access to standard size lots of currency using a leverage of 100. It normally requires the trader to have an available minimum capital of $1,000. With leverage, you can boost your trades, but at the same time, it can quickly lead to losses if the market moves against you. Mini trading accounts are usually accounts with a smaller capital required to fund them, and traders can trade mini lots with less exposure to potential gains or losses. Mini accounts can be funded with a minimum of 500 or less, and leverage can be 1 to 400. Such accounts are good for beginners as they can try and test strategies with less capital. As I was saying, micro trading accounts are usually offered as an incentive to encourage traders to trade Forex with low levels of risk. A micro account offers traders the opportunity to trade in micro lots of $1,000, which means less capital is needed to begin trading. Brokers provide managed accounts, which means that a trader does not need to trade themselves, as they have the option to be assigned to a master account, which can then manage trades on their behalf. Thank you very much for joining us. See you tomorrow. Bye-bye.